What's up, everybody? This is Sunko, the Korean bro. Today is 2022, December 26th. Hmm. It's been a couple of days, and let's see what we have, okay? What unstoppable stocks for 2023 and beyond? Focus on competitive advantages. Better buy Netflix versus Amazon. Better buy for 2023. Dutch Bros or Black Rifle. 5 sleep and night microchip stocks with growing passive income. Micron has a strong balance sheet but way too much inventory. Hmm. Three things you probably didn't know you will pay taxes on in retirement. Three dividend stocks that should pay you for the rest of your life. Stock market sell off. Three stocks to avoid in 2023. Okay. One unstoppable stocks for 2023 and beyond. Focus on competitive advantages. A strong brand offering pricing powers is a powerful advantage for many companies. Strong brand offering, okay. The network effect is an advantage that's hard to duplicate. Okay. Industries with barriers to entry can harbor advantaged companies while greatly benefiting shareholders. Okay. Mm, Bargaining powers. Okay. Competitive advantage. Here's how the Corporate Finance Institute describes competitive advantage. Competitive advantage refers to ways that a company can produce goods or deliver service better than its competitors. It allows a company to achieve superior margins and generate value for the company and its shareholders. Economies of scale. In general, the larger a company is, the less it can cost produce each of its widgets, affording it higher profits. The ability to charge lower prices, or both. Higher profits can be used to pay workers more, invest in further growth, to buy more advertising, and so on. Valuable brand, a well-known and well-respected brand is very powerful. It can give a company a good reputation and pricing power too, permitting it to hike prices without losing much business. Consider Disney and Toyota. If you want to see a movie, you will likely assume that any Disney offering will be fairly high quality. If you are in the market for a car, you will think of Toyota models as ones that should be quite reliable. You may also pay up for such companies' offerings, seeing them as high quality and worth the extra cost. Bargaining powers, ecosystem of offerings. Having products and services that are interconnected can be an advantage. Apple, for instance, has a big ecosystem with many customers owning or using multiple products and services that work well together. Since it would be troublesome to switch to other providers for some or all of these, many customers stick around. Hmm. Network effect. With many products or services, their value is tied to the number of people using them. That's a network effect advantage. eBay, Etsy, and Amazon.com marketplaces are bustling and valuable because of their many users. If you want to sell or buy some, you go to such places because that's where the buyers or sellers are. Social media sites such as Facebook, Instagram, and sites such as YouTube are succeeding in large part due to the many millions of people using them. Barriers to entry, innovation, optionality, switching costs, blah blah blah, and they are the things that describes competitive advantages. Okay. Better buy for 2023. Dutch Bros and Black Rifle. What are those companies? Hmm. Dutch Bros had 641 coffee shops locations at the end of the third quarter of 2023. Okay, Dutch Bros is the name of a coffee shop. Okay. And what else do we have? Black Rifle. Black Rifle is in the coffee business, but it couldn't be more different from Dutch Bros. Whereas Dutch Bros generated 87% of quarter three revenue from company owned stores, Black Rifle only has 21 stores total. Rather, Black Rifle generated 93% of its revenue in the third quarter of 2022 by selling coffee beans directly to consumers and from selling products at wholesale retail partners like grocery stores and convenience stores. Let's skip this one. And next, 5 sleep and 9 microchip stocks with growing passive income. Uh, It has been a rough year for semiconductor stocks, but all may not be lost after all. Semiconductors power. All of today's big technology applications, from artificial intelligence to the Internet of Things, to the metaverse and electric vehicles, while somewhat cyclical, semiconductor stocks are usually generally quite profitable, and their stocks are less expensive than the high-flying software sector. Despite this year's historic slump in PCs, smartphones, and consumer electronics, several top chip stocks have the right products and end markets to grow through the current downturn and pay you a rising dividend along the way. Here are 5 names you don't have to worry about, and you can look forward to collecting a rising annual dividend payment year in and year out. And and the list continues, and things that are included in this list are TSMC, ASML, Broadcom, Intel. There is a technical reason ASML should also grow next year business. Because of shortages, ASML has been shipping tools to customers before final qualifications. ASML can't recognize revenue of a shipped machine until it is qualified at the customer, which takes longer. So ASML's recognized revenue has been lower than its orders this year. For instance, while ASML recorded only 5.8 billion euros in sales last quarter, its order book came in at 8.92 billion euros. Micron has strong balance sheet but way too much inventory. Micron has piled up $12 billion in cash and investments, which will help it will weather the current downturn. However, this downturn may be prolonged by the scale of excess inventories across the memory chip supply chain. Micron's balance sheet will deteriorate as, its losses for much of 2023. Okay, let's read this one. Is a bull market underway in 2023? Here's what history shows. The S&P 500 often bounces after a bad year, with an average increase of 12.8% since 1940. However, stocks usually fall during recessions, and many CEOs and economists think a recession could be coming. Okay, the future isn't dictated by the past, but there are lessons to be learned by looking back. Okay, there are some lessons to be learned, but the future isn't indicated by the past. Okay, there's a lot of pessimism among investors as we approach another new year. 2022 brought the first sustained bear market in more than a decade. Inflation remains at the highest level in 40 years. Big companies are laying off workers, consumers are pinching their pennies, but an old saying comes to mind: it's always darkest before the dawn. Even a cursory examination of the past shows that the stock market can quickly turn around. Is a bull market on the way in 2023? Here's what history shows. The bounce after bad year trend. The S&P 500 is on track to finish 2022 down close to 20%. That has happened only 6 times since 1928, and in 4 of those cases, the index delivered a return of more than 20% in the following year. Note that the 2 exceptions when the S&P actually declined during the year after closing down by at least 20% occurred during the early part of the Great Depression. A lot has changed since then, notably a huge increase in retail investors. There's also a distinct bounce after bad year trend on an overall basis after the end of the Great Depression. The S&P 500 finished in negative territory 23 times between 1940 and 2021. In 19 cases, the index was up the next year. The year of a recession pattern. Speaking of recessions, though, there are widespread concerns that a recession could be on the way. A whopping 98% of CEOs surveyed recently by the Conference Board think that the US economy will enter a recession within the next 12 to 18 months. Wow. The pessimism isn't limited to top executives. A Bloomberg News survey conducted earlier in December found that the 4 out of 5 economists expect a recession in 2023 or 2024. So a lot of economists and experts expect that we'll have a recession. So fears are looming. So it's a great chance to buy stocks. How has the stock market performed historically during recessions? Not good. The following chart tells you a story. The periods when the US economy was in a recession are shaded in gray. The S&P 500 fell during most recessions. In some cases, the decline was especially steep. However, stocks don't always sink during recessions. For example, the S&P 500 rose during the recessions of 1980 and 1990 to 1991. A 2023 bull market. So, will there be a bull market in 2023? The historical precedents are unclear. While it's true that the S&P 500 does usually climb after experiencing a down year, it doesn't always do so. And if a recession is right around the corner, the odds that the stock market will fall seem pretty high. Similarities between our current conditions and past periods exist. For example, the United States had high inflation in the 1970s and early 1980s, but there are also factors employed in today's economy and the stock markets that are different from those we've seen in previous years. The potential for a bull market in 2023 depends on much more on how events next year unfold than on what has already happened. Bottom line, the future isn't dictated by the past. However, a bull market will come sooner or later. The present market decline could offer a big opportunity for patient investors. So, to sum up, many experts and economists think that recession will come, and recession will come in the year 2023 or 2024. So my opinion is it's a great time to buy stocks, especially when fears are looming, because many people uh, will be against in terms of trading, right? Okay, let's go to marketbid.com. Mm. Hmm. Stocks waver on Wall Street after mixed data on the economy. Five down, but not out stocks to watch for 2023. Mm. Investors frequently look at the relative strength indicator (RSI) to identify oversold stocks. Genrock has fallen based on concerns over future growth, but the sell-off appears to be overdone. Costco is down as investors fear consumer demand is weakening, but the company's retention numbers may signal consistent earnings. Tesla continues to sell off at a rate that seems disproportionate to the company's revenue and earnings growth. General Holdings. General Holding stock is down over 72% in 2022. The company is known for its home generators, but the company supplies a range of products, including power generation equipment and energy storage systems for its residential, light commercial, and industrial customers. Okay. Costco Wholesale Corporation, Tesla, Medtronic plc, Next Era Energy Partners. Okay. Your decision to buy Palantir may simply be a matter of time. Palantir stock got a short-lived bounce after announcing its latest defense contract. The contract is another example of the company doing what it does best, and the company believes it's a growth path. Investors remain concerned that the company is having the trouble generating significant profit. Palantir. Palantir. What was Palantir, the company? Let's go to yahoofinance.com and find out Palantir, the company, okay? Hmm. Mm. We build software that empowers organizations to effectively integrate their data, decisions, and operations, generating alpha amid continuous disruption. Uh, Palantir Technologies builds and deploys software platforms for the intelligence community in the United States to assist in counterterrorism investigations and operations. The company provides Palantir Gotham, a software platform which enables users to identify patterns hidden deep within data sets ranging from signals, intelligence sources to report from a confidential informants, as well as facilitates the handoff between analysts and operational users, helping operators plan and execute real-world response to threats that have been identified within the platform. It also offers Palantir Foundry. So what they're mainly good at is produce uh, software program that possibly captures threats in advance. Mm, okay. And they can actually capture pattern, which can possibly be used as a mm, business source. Okay. Inflation cools. Where does the S&P 500 go now? Inflation cool, but it's still running hot over 4.5% core. The index of leading indicator is trending lower and accelerating. The market may rally, but there's no reason to think it will last. Okay. The PCE price index cooled on a month to month and year over year basis, precisely what the market wanted to see. So inflation is cooling down at this point, that's for sure, right? The bad news is that the index cooled less than expected at the core level year over year and remains high at 4.7%. And this level, inflation has peaked, but is still trending in a range that is more than double the Fed's target. It has then on track to continue hiking rates well into 2023. The added risk is that those outward revisions to previous data are also still in the picture, so there is a chance we'll see this month's figure pushed up in the coming months. They are likely to keep the pace of interest rate hikes slower than the historic 75 BPS pace is set early in the year, but the peak of interest rate is still on track to top 5.0%. Recession is at hand. Leading indicators accelerate their decline. Hmm. Stocks waver on Wall Street after mixed data on economy. Okay. I was really looking forward to looking at interesting news, but I don't find any at this point. Hmm. Hmm. Okay. Microsoft Corporation, and we have Alphabet. They are the companies that I already know. Hmm. Let's try to find more information about Alphabet. I already know much about Microsoft, but I feel like I know less uh, in terms of what they do. Okay, next up is Alphabet, the parent company of Google that everyone knows. The world's largest search engine is part of an overall firm that boasts a $1.16 trillion market cap, making it the third largest publicly traded firm. After Microsoft and Apple, Alphabet isn't just Google. The company also owns the Android OS, the popular YouTube website, mm, and is even moving into the autonomous vehicle niche through its Xiaomi subsidiary. While Alphabet remains near the top of the global tech industry, the recent third quarter 2022 shows some cracks that will need to be addressed. For the most part, these are related to general economic conditions, particularly shrinking advertising budgets in the online industry. Blah blah blah. But they are the things I already know, so I'm just gonna skip. What else do we have? With the brutal returns of 2022 almost behind investors, those looking to make up lost ground might do better to look abroad next year. Some strategies see a better setup for foreign stocks than their US peers, a change from the recent past when investors were rewarded for staying close to home. Over the past 5 years, the iShares MCSI stocks in Europe and emerging markets are cheap compared to those in the US, but that's not the only draw. Diverging monetary policy and economic backdrops, as well as investors having little allocated abroad, could set up international stocks relatively well for 2023, especially if the dollar strength wanes in coming months. Yeah. Okay, there's not much to read tonight. Anyway, it's good to be back, and I'll probably do YouTube live 3 days in a row or 4 days in a row from now on. So I'll see you guys tomorrow. Okay, bye bye.